Hey everyone, Adam Bergman, tax attorney, founder of Ira Financial. And we've got a great episode for you today on another episode of Ask Adam. And I'm here to answer all your self-directed retirement questions. So let's get started. We're going to go for maybe 45 minutes, an hour. We're going to have a lot of fun. Got a lot of interest in these episodes, so have some fun today. Just an FYI, a little house cleaning, or housekeeping, I should say, before we get started. Follow us on YouTube. We got a great channel, really robust. Put a lot of time and effort. Generally drop 5 videos and 3 podcasts a week. So definitely want to check out our YouTube channel. You're on it now, so you might as well subscribe. Whether you're a client or not, love to hear from you. If you have comments, questions, you can send them. You can comment on any of our videos, and we do our best to get back to you. And guess what? It's not just me. Got a team of 80 plus self-directed retirement experts at Ira Financial. So we are here to help. If you have questions, if you're a client, if you're looking to potentially set up a self-directed IRA or solo 401k, we are your team, and we'd love to work with you and help you out. That's what we do. IRA is our first name. That's what sets us apart. We have the expertise of almost 30,000 clients, $5 billion in assets, and we want to help. So let's get started. First question. And I got some questions too that were sent to me by email, so I'm going to kind of toggle back and forth. First question, I was interested in Bitcoin mining through a hosted company with Ira Llc funds. Can you explain if and why this would not be considered a trader business with UBIT applications? When would it? Well, it's a great question, JRR. This is what, I'm going to read you what the Iras says, an Iras form or notice 2014-21. This is all the guidance we have, so we can kind of talk about what the Iris means when it says, if a taxpayer mining a virtual currency constitutes a trader business and the mining activity is not undertaken by the taxpayer as an employee, then the net earnings are subject to self-employment tax. So they're basically saying, listen, if the activity rises to the level of a trader business, then it's deemed business income, and the income would be subject to then, obviously, self-employment tax in this case, because it's business income and would not be passive. So it's a fact and circumstances test what constitutes a trader business. It does not necessarily mean that every time you invest in a Bitcoin mining company, you would generate UBIT. But if you are investing in a operation that is a business, right? They're generating through the mining activity, they're generating Bitcoins, which is deemed inventory. Some people think it's a dividend or interest. The IRS basically, under notice 2014-21, is telling you it's basically inventory. It's business income. It's not a dividend. So if you're investing in an operation which generates mining activity and they are treating themselves as a business, then if you have $1,000 or more of net income attributable to the mining activity, then you are going to have UBIT. Okay. Now, how could that be potentially passive? Well, if you are investing maybe with some colleagues or friends, and your friends bought some equipment and are just going to passively mine some Bitcoin, you probably have a better chance of arguing it's passive versus investing through a mining operation, an actual business operation, third party that treats itself as a business. Now, there's a difference between proof of work and proof of stake, right? Proof of work is more akin to Bitcoin mining, where there's computer algorithms that are solving complex solutions and as a reward are receiving a Bitcoin. And according to the IRS, that Bitcoin could be deemed inventory and subject to the UBTI tax if it's being mined by a business. If it's being mined passively by someone maybe who just has a game cartridge on their computer and doing this kind of on the side, maybe you argue it's passive income. But again, it's all about constituting a trader business. Now, if it's POS, proof of stake, Some people say that's harder to show that it is a actual business because it's so passive in nature, right? You're just staking your coins. You're not doing anything, and receiving a reward for proof of stake, some people argue, should not be deemed inventory and thus not be deemed mining per se, as per Notice 2014-21. Again, we're waiting on more guidance from the IRS on this. And unfortunately, we're kind of in a holding pattern. I have clients ask me a lot about this, and I just kind of say, listen, it's gray. If you are investing again in an active trader business through a third party that is a mining company, then it's probably mining income inventory, thus subject to UBTI. If it's passive, then you have a better shot. Now, if it's Ethereum, proof of stake, some other potential crypto, then again, you may have a stronger argument to show that it's not actual inventory and you're not doing anything to receive these rewards. It's akin more to a dividend versus income. But I hope we get more guidance on that. I wish I could be more helpful. But again, as a tax lawyer, I want to try to at least provide both sides and let you know it's really still facts and circumstances. There's still not a lot of guidance when it comes to cryptos, especially when it comes to retirement accounts and UBTI. So the second question is from Tony Williams. My 401k LLC owns a rental home and I want to live in it when I retire. The market value is about 200K. What are the tax implications when I move in? So great question, Tony. If you want to move into the home, now you're generally going to want to be over 59.5 because generally if you have a 401k, unless you terminate your plan, you're not going to be able to take that asset as an in-kind distribution without a plan triggering event. So generally to have a plan triggering event, you need to be over the age of 59.5 or leave your job. And if you have a solo plan, you basically either terminate it or reach the age of 59.5. That will in fact give you that triggering event you need to take that in-kind distribution. So let's assume you're over 59.5, Tony. It's simple. It's an in-kind distribution and it's subject to tax if it's pre-tax. If it's a Roth 401k component, there's no tax and it's all based off the fair market value. Not what you paid for it, but the fair market value. So if you bought the property for 100K and now you're 63 and want to take an in-kind distribution of that asset and it's worth 300, then you'd pay tax if it's a pre-tax 401k on the 300. Okay, there'd be no penalty because you're over 59.5, but you would be subject to tax. You would file a 1099-R at the beginning of the following year, and you pay the tax on your 1040. What's the tax rate? Well, it's based off all your income. So the $300,000 based off our example would be aggregated with all your other income, and then your tax rate would be based off all your income. Tony, again, do I have to pay the taxes in full that year? Yeah, you pay it when you file your return next year. You can't spread it out over a period of years. So if you do the in-kind distribution in 2021, you're going to pay tax April 15, 2022 on your 1040. Next question is from Daniela. I have real estate in a self-directed 401k through an LLC. My question is, at what age can we sell the properties and take the money out without penalties? Great question. So it kind of follows Tony's question. You need to be over the age of 59.5 in order to pull that money out without penalty. You pay tax on it. If you have a Roth component, you can pull the money out once the Roth's been open 5 years and you're over 59.5, and then you can pull the asset or cash out without tax. So that's the distinction between a pre-tax 401k and a Roth 401k. The pre-tax 401k, you need to be over the age of 59.5, and the Roth 401k, you want to make sure the Roth has been open at least 5 years and you're over the age of 59.5. Ed, my self-directed IRA owns property being built abroad. Nice. I will lease the house to a vacation company for 5 to 6 years. Cool. If I pay taxes on profits in the foreign country, how do I later get U.S. tax credits? Well, Ed, you can't. There's no tax credit for you. Why? Because you don't own the property, Ed. Your IRA does. And IRAs don't pay tax in the United States. So unfortunately, in this setting, you're not going to get a tax credit for any taxes your IRA will pay in a foreign jurisdiction. And you could say this is a downside of owning real estate in a foreign jurisdiction, because any tax allocated to that foreign jurisdiction, there will be no reciprocal credit to you in the United States, because you don't own the property and your IRA doesn't pay tax and file a tax return. So that credit generally will not be available for foreign real estate. Let me just toggle back to some questions I got by email. So let's go to a question here. My husband and I would like to open a self-directed Roth IRA funded through the LLC. Okay. Question 1, do we open the Roth IRA before or after the LLC? So you want to open the Roth IRA first. So the way you should do it is you should go on the Ira Financial app. You want to open a Roth IRA. You fill out the application. It takes you 5 minutes. We will then transfer the funds for you as part of the transfer request. And that's part of the onboarding process. You'll tell us where the money's coming from, and we will grab it for you tax-free. When the money hits Ira Financial, we will notify you, and then you will, at that point, hopefully we are setting up your LLC for you. We will let you know when the LLC is set up. We can open a bank account for you at Capital One if you wish. And then at that point, once the LLC account is open, you will then acknowledge and notify us to send the money to the LLC, and we will fund your LLC with the IRA fund. So number 1, set up the Roth. Number 2, the LLC. 2, is the Roth IRA account under our names or the LLC name? So Roths are open by individual. So Adam Bergman would open a Roth, not an entity. Only individuals can open IRAs. So companies can't, and trusts can't. You need to be an individual, either that has earned income or that has a retirement account that you want to roll into. So you would open the IRA, you'd go on our app, we take care of all this for you. So you don't need to get bogged down. And guess what? We have chat features. We have 80 plus team members that are here to help. Our phone number is on our website. So guess what? Call us if you have questions. A lot of our competitors don't even have a phone number on their website, which is kind of crazy because you're dealing with retirement accounts. There's questions, there's rules, there's procedures, there's regulations. We want to make sure you do everything right, make sure we maintain the tax-free nature of your retirement account, and we're here to help. So don't worry. If you have questions, you can chat us, you can email us, you can call us. We would love to hear from you. Okay, so don't worry, we're here to help, and we'd be honored to help you out. This is another one. Robert, dear Adam, I will not be on the Q&A today, or thanks in advance for answering my question. May I repay part of a Corona-related IRA distribution as part of the CARES Act? The IRA states it's permissible in general, provided that you complete the repayment within 3 years. So yeah, under the CARES Act, you have 2 options. You can elect to pay the tax all in 1 year, okay, or you can spread it out over 3 years. If you spread it out over 3 years, that means you can't ever put that money back in. It's stuck. You've elected to take it as a distribution, and the IRS has given you a 3-year window to pay that tax. If you pay it up front, or in the first year, I should say, then you have the option of repaying the amount of that CARES Act distribution, which is generally up to $100,000, and then you could amend your previous tax return where you reported that income and get a refund. Okay, so you have those 2 options. If you elect the 3-year window, Robert, then you're stuck. It's a taxable distribution. You can't go back. If you elect to pay it out the first year, then you have 2 more years to come up with that cash, put it back in the IRA within the 3-year period, and then obviously amend your tax return and hopefully get a credit back for the tax you paid. So that's what your options are, and you can go either way. It's just once you stay on that either track, you're kind of stuck to it. 3 years, can't go back, and if you do it up front, then you have the option of going back, but you don't have to. You can pay it all in 1 year and just never put that money back in the IRA, but you're not going to get a credit. Next question is from Kelly. Thanks for all you do. I love your books. Well, thanks, Kelly, for the kind words. They've answered most of my questions, but I'm missing the following. If your self-directed 401k buys or creates another LLC, then hires employees, what needs to be done? Okay, so generally, if you have a 401k that invests in an LLC and you're going to have employees, that's going to be a business. So number one, you don't want to hire yourself, and you don't want to hire any disqualified people, lineal descendants, because that can potentially trigger a prohibited transaction. So let's say you just hire third parties, right? That's okay, but, and this is the big but, Kelly, you're likely going to trigger the unrelated business taxable income tax, or UBTI. Why? Because you're operating a business. Why is it a business? Because you have employees. It's going to be deemed a business, and if there's more than $1,000 of net income, you're going to trigger the UBTI tax. So just something to be cautious about. The LLC is a pass-through entity. More than $1,000 of net business income, you're going to trigger the UBTI tax. If your 401k, on the other hand, set up a C corporation, the C corp would block the application of the UBTI, and you would block the UBTI tax, but you'd still be subject to the corporate tax of currently 21% on corporations. So, just something to consider. The Biden administration's talked about increasing the cap, or the tax, I should say, from 21 to either 28 or 25%. So we'll see where that goes. But as of today, if you want to use a C Corp blocker, it's 21%. Whereas if you use the LLC and are subject to the UBTI tax, you're going to get hit with up to a 37% tax, which is the highest tax on the UBTI scale, which basically follows the trust tax rates. Okay, so really good question, Steve. Kelly, sorry. We got a lot of questions here. I'm going to do my best to get to all of them. If I don't get all your questions, I'm going to keep them in a queue and I'll answer them. I do a really good podcast called AdBits. So check it out. I also launch it and release it on YouTube, and you can pick it up anywhere you listen to podcasts, whether it's Spotify, Apple, SoundCloud. And what I do is each week I answer 3 of the best questions from clients or non-clients that I get from social media or I get from email. So it's a really cool podcast. It takes 10, 12 minutes out of your day. And I'm going to answer 3 questions. So if you like this format of Ask Adam, I think you'll really like that podcast. And check it out, because you may learn something. I know I do each week. Mike C. Can I buy and sell NFTs in my self-directed IRA? What about playing games using those NFTs? Can crypto earned through playing games with NFTs be put into my IRA? Oh, Mike, great questions. Awesome question. So what's an NFT? Okay, it's a non-fungible token. Is an NFT a collectible? I don't know. The Iras hasn't issued guidance. It probably will be treated as a collectible. Okay. There's obviously been a lot of media attention to NFTs in the last 6 months. You've heard of people, famous artists selling digital art for $65 million. A LeBron James highlight went for a few $100,000. You keep hearing stories. Jack Dorsey of Twitter sold the first tweet for a few $1 million. So is it a collectible? And why do we care? Well, Section 408M of the Internal Revenue Code says you cannot use your retirement account to buy collectibles. So if an NFT is a collectible, it's going to be prohibited asset and will not be able to be purchased using an IRA or 401k. So it's relevant, okay? Personally, why do I think an NFT will be treated as a collectible? Number one, the capital gains tax on collectibles is higher than the average capital gains tax, which is either 15 or 20%. It's generally about 28% for collectibles. First of all, the person who creates the NFT will pay ordinary income when they sell the NFT because it was an asset they created. But if you're just selling the NFT, is it a collectible? Probably. If it's art, I don't know how the IRS won't deem it a collectible. Section 408M specifically lists art as a collectible. However, very interesting enough, if you look at Section 408M, it talks about tangible personal property. So if you look at Section 408M, it gives a list of potential collectibles, and then it says, well, the Treasury has the ability to prescribe additional assets that could be deemed collectibles, and it uses the word tangible assets. So tangible means something you can touch. So does that mean that an intangible asset like an NFT cannot be deemed a collectible? I don't know. Also, I do know when this was drafted back in the 70s, I don't think the Iras thought that we would be in a world where people would be buying digital collectibles for a lot of money. So I don't think they foresaw that ever being an option. So I don't know. If I had to guess, Mike, I would say they're going to probably treat it as a collectible and thus not being able to be permitted as an IRA or 401k investment. But as of now, again, there's no guidance. So, I guess just be cautious. I wouldn't play any games and buy NFTs because, again, you're playing the game. I think that's potentially too close to you, personal benefit, especially if you use the NFTs like to buy skins. Like my kids love Fortnite. They use V-Bucks, right, to buy skins. I wouldn't suggest using your IRA for that stuff. Or my kids also play NBA 2K where you can buy players. I wouldn't use your IRA for that stuff. I would really try to distinguish yourself and separate yourself from your retirement account investment. And I think NFTs ultimately will probably be deemed a collectible. Mike's got another one, but airdrops when random people gift cryptos or NFTs to my Roth IRA. Again, like why is someone airdropping you an NFT or crypto? Is it because you're streaming a video game? And then again, that goes back to self-dealing, conflict of interest. Are you the one that's generating the value for your retirement account? Could be a potential prohibited transaction. So Mike, I wouldn't do it. It's probably not something I would do. It's probably potentially a prohibited transaction. Oh, this is another one from Holo Cross. Do you offer a comfort letter guarantee that you stand behind the validity of those and choose to invest using the IRA in DEXs? I don't know what, comfort, a decentralized exchange, there's nothing in the tax code that says you can't use a DEX. We certainly will stand by that. We're happy to provide you some type of comfort letter. It wouldn't be a law firm opinion letter because we're not a law firm, even though I'm a tax attorney. We are very comfortable with the fact that you can use a DEX. Again, we'll see where the regulation goes with DEXs, right? We saw as part of the infrastructure bill, the definition of broker was expanded to potentially attack DEXs who the main point is to require these DEXs to potentially report transactions to the Iras. So the Iras, the SEC, they commodity governance, they are worried about DEXs because it is decentralized and it's unregulated. But there's nowhere in the code that says you can't transact using a DEX. Again, what creates a prohibited transaction? 4975 and 408. Okay, is a DEX a collectible or life insurance? No. Does it violate 4975? Well, the only way a DEX would violate 4975 is if you're trading with a family member using that DEX, right? If I have some Ethereum-based coins and I'm trading with my son to convert to Chainlink, then maybe that would be prohibited, right? But if I'm trading using a DEX with a random person, then how could that be prohibited, right? It's like just selling a stock using Robinhood or Schwab to a third party. Like, how would that be disqualified? So I don't see anywhere that can be a prohibited transaction at all. There's no physical possession requirement. We're one of the few or only IRA custodians that let you pull your cryptos off an exchange. We have a partnership with Gemini where you can buy cryptos in an IRA or 401k in Gemini, where you can access Gemini on your app, so you control it through the Gemini app, and it's in the IRA, so there's no reporting issues. We take care of all the IRS reporting, and then you could let us know and we will unlock that account so you can move the cryptos off the exchange into a cold wallet, and then from there you can use a DEX to transact. Again, there's nothing in the IRS tax code that will prohibit you from doing that, so long as you're not violating any rules or crypto or SEC or commodity-based or any state rules. There's nothing in the code that will prohibit you from doing that. So if you want some type of comfort letter, I'm sure our compliance department will be happy to give it to you. And certainly we stand by the ability to use DEXs. But again, this is something that you'll see crackdowns on, especially from an Iras standpoint for reporting, because they're worried that there is people that are using, a lot of people using DEXs and not paying tax on the transactions because it's unregulated and decentralized, which is one of the advantages. But from an Iras treasury standpoint, that's not something they really appreciate. So again, you can just see based off the definition of broker, which I assume you're going to see the House pass, and then ultimately, if it gets part of some type of legislation that the president signs, you will see some definition scope of a broker that will apply to DEXs, because they ultimately want DEXs to be regulated. So they just perform the same functions as a Gemini or Coinbase, and you can't just transact with third parties in an unregulated format. So I think that's certainly coming in the pipeline, but not something from an IRS prohibited transaction standpoint that I'm worried about. Next one's from Paul. If an Ira Llc owns a house and the owner is 60 years old, can they take out any money in the Ira Llc account without penalties? Yeah. Anytime you're over 59 and a half, you can pull money out of your IRA without penalty. You just have to pay tax. If it's a Roth IRA, so long as the Roth's been open 5 years and you're over the age of 59 and a half, you can pull those funds out tax-free. Now, how do you pull money out of an Ira Llc? You should not pull those funds directly from the LLC to you. Those funds need to go from the LLC to Ira Financial Trust or the custodian you use, and then we will send the money to you. Why? So we can properly report it to the IRS by way of a Form 1099. So don't just pull the money from the LLC. Make sure you send the money to us. You can go on our app and just complete a distribution liquidation questionnaire / form, and we will process those funds and send them to you, and then properly report them to the IRS. Next question from Ren. Can a person keep the money in a self-directed 401k if they shut their business down or do have to roll it to an IRA? So these are amazing questions. Thank you so much, Ren. It's a really great question. I probably should have done a podcast or video on this. So generally, if you don't have a business, you're not eligible to set up a 401k, right? But when you set up a 401k, the IRS wants that plan to be permanent. So the idea is that, hey, I'm setting up this 401k. It's a permanent event. It's not something that I'm going to do and then just close in a year. Thus, if you are operating your business and you are potentially shutting it down, it's okay to keep the money in a 401k probably for a year or even 2 years, because, hey, that business may end up starting again, or could potentially come back to life. But if you know, Ren, that the business is stopping, like you're retiring, you're going to play golf or just go sailing, and there's 100% chance you're not going to be using the business any longer, then yeah, I would just close the business, move the money tax-free to an IRA. You just need to file a final 5500 EZ, which we can assist you with. And even if your plan assets are less than 250K, you still have to file a final plan form 5500 EZ and indicate it's a final plan year. And you just submit that by July 31 or with extension October 15th, and you're done. And we will take care of the rest. We will help you do this. And then you can roll the money tax-free to a IRA or a Roth IRA and just have it in a self-directed IRA. This way you don't have any further compliance. We handle, Ira Financial will handle all the IRA compliance, and you don't have to deal with a 401k. But again, if you think you're still going to potentially operate this business in the next couple of years, then you can keep the plan open and just use the plan as you see fit. You just obviously will not be able to make any contributions to the plan because you'll have no income from that business. Jennifer, I need help filing tax returns for my Ira Llc with Checkbook Control. Okay, Jen, if you have a single member LLC, you're not going to have any federal tax return. If your LLC is owned by 2 or more IRAs, then it will be deemed a partnership, and you will have to file a 1065 partnership and state partnership form. Let us know if you have questions. We have accountants that can assist you. It's really super easy because there's no tax that has to be paid, right? A partnership is a flow-through entity. No tax has to be paid. but you still have to file the return. So let us know, and we can assist you, or have accountant assist you, or we can show you and point you in the right direction how to get this done. Okay. Yeah, you can, if you pay our annual consulting fee, which I suggest, obviously is a great thing. Yo, call us. We'll help you out, Jennifer. I promise. We'll point you in the right direction. We got you, Jennifer. Just if you have a question, it seems like you're still frustrated, you can email me directly. I will personally take care of this for you, abergman@irafinancial.com, and I will get you the help you need. I promise, Jennifer. Okay, I got you. Carl, can I change banks from my LLC checking account, or can I have more than one checking account? So great question, Carl. You can have multiple accounts for your LLC. You can open an account at Capital One, Bank of America, Wells Fargo. There's no requirement that you need one bank account, just like a business or real estate venture can have accounts at more than one bank. So you're good. All across, I definitely appreciate you doing this. Yeah, I appreciate you guys on this YouTube episode. It's great. I just wanted to say thank you again. I got the best, smartest clients out there. We're getting close to 30,000. I'd like to get to 100,000. The self-directed retirement nation, we need to keep getting bigger. There's so much amazing people that I've met and talked to over the last 11 years. And really, just from the bottom of my heart, just wanted to thank all of you for caring so much and just being part of Ira Financial. And if you're not a client, then no problem. I still really appreciate you guys listening, and I'm here to help. It's my passion. Went to law school. I got a master's in tax law, and I was a practicing tax attorney for 9 years at some of the biggest law firms in the country. And you know what? Talking to some of my clients, I've learned more from my clients and researching great questions than from brilliant tax partners that I work with that went to Yale and Harvard. So I just want to thank you also, all of you guys, for your questions, your thoughts, your comments. I've learned so much from you. You guys have kept me going, and I'm just so fortunate to have found this industry. I liked practicing law. I was pretty good at it, but I never really found my passion until I found this industry. And it's so awesome, and we just need to educate more and more people that you can do this. You can use your retirement funds to do alternative asset investments and do really cool stuff to help grow your retirement future. So spread the word, and hopefully we can keep growing, and we all can make more money, right? It's the end of the day. Can I use, this is one's, I'm going to skip around here. Okay, Eric, can I use my self-directed IRA to exercise stock options? Will this delay AMT? Again, you need to have, if your stock options are, Eric, for you personally, it's going to be tough to use your IRA to exercise them, because especially if they're ISOs or depending on what kind of stock options they are, they're attributable to your performance and services with that business. So let us know. That's a question we're going to have to talk to you about, because it could be self-dealing or a conflict of interest prohibited transaction if you're shifting income by exercising that option attributable to your performance of service with that company using an IRA. So let us know. Thanks, Vic. Appreciate you as well. My wife and I have checkbook control. Can we partner 50-50 on a single rental property, or would this be a prohibited transaction? So technically, you and your spouse are disqualified, clearly, right? And your IRAs are even technically disqualified persons. Now, if you fund this venture using IRA funds simultaneously, I think you can do it. I think it would be awfully hard for the IRS to argue there's any self-dealing or potential conflict of interest, since all the benefit is being derived by your IRA. None of it's going to you personally. So what I suggest is, yeah, you can set up a new entity or just do a joint venture, fund the deal simultaneously with your LLC and your spouse's LLC, do it together, and make sure the profits, losses, distributions are allocated pro rata. But I would not commingle personal and IRA funds. So for example, if you're going to use 50% of your IRA, 50% of your spouse's personal money, I think it's a bit risky. There's a case called Henry Kellerman which is a bankruptcy case where there was a situation where husband and wife, they had an entity that owned property, and then they did a joint venture with their IRA, and the bankruptcy court agreed that it was a prohibited transaction because it was self-dealing. So you still got to be careful anytime you commingle personal retirement account investment into one transaction. Just be super careful about that. But if it's IRA funds, I think you're good. Okay, another question. I'm going back to my emails. It's from a very happy client. Well, that makes me very happy too. Hi, Adam. What's the best way to move personally owned Bitcoin into my IRA? Oh man, you can't do it. If you own the Bitcoin personally, it's tainted. It's like real estate or stocks. You can't do it. What you can do is sell the Bitcoin, and you can make a contribution of $6,000 or $7,000 if you're over 50 to an IRA, and then repurchase that Bitcoin in a retirement account. Or if you're self-employed, you can set up a solo K, sell that Bitcoin, and then if you have enough income or you have rollover funds, use your solo K to purchase Bitcoin in the 401k. But you can transact with an IRA or 401k and any asset you own personally. That would be a prohibited transaction. So I definitely suggest not doing that. It would not be a good idea. Got lots more questions, God. And I'm sorry my head is down, but I don't want to ignore any of these great questions. Sorry. Okay, another question. If you have a solo K and purchase rental real estate with it, what happens if you want to convert it from a rental property to a second vacation home? Okay, so again, if you want to use your property for personal purposes, it's like taking it as an in-kind distribution. You can do it, but again, make sure you're over 59.5 and you're going to pay tax. You're not going to pay 10% penalty if you're over 59.5, but you're going to pay tax on the fair market value of that asset. Not what you paid for it, but on the fair market value. So just be super careful about that. And again, if you're under 59.5 and you don't plan on terminating the plan, you may not be able to do it. Even though you want to take a distribution, there's something called a triggering event. So you may not even be able to do it because you're not over the age of 59.5. So let us know if you're a client of ours. Again, we have 80 plus team members. We're here to help. That's our jobs. We are the IRA experts. IRA is our first name. So let us know. Okay, you can chat us, you can email us, you can call us. It's another good reason to be part of our compliance service. You will get these questions answered. You can also hop on another Ask Adam or send me an email and I will get to your question on a Adam mail episode. But we're here. Don't worry. You're not alone. Okay, that's the whole point why I created Ira Financial, is because it seemed when I first got into this industry, it was very frustrating because even though I was a tax lawyer, there was hardly any good information, especially free information online, and there was limited resources available. And it was super frustrating because as a tax lawyer, I was trying to research for a client, and basically the client wanted to know whether he could use his IRA to invest in a hedge fund. And this was a super smart, very, very, very successful client. And I was at a really, really big law firm. So I had access to a tax library. So there was 2 librarians. This is back in mid 2000s. So they actually had libraries, right? Believe it or not. And there was only one BNA tax management portfolio. So it's like one basically book on prohibited transactions. There was hardly anything else on various tax databases. So it was super frustrating. So when I decided to start Ira Financial, I said, I want to start a company that's going to help not just tax lawyers or accountants, but all Americans understand the beauty of using retirement funds to make alternative asset investments. I wanted to democratize alternative assets, and I want to give you all the rules in a very easy format so you can do things safely. But I also understand that a lot of the application of the rules comes down to facts, circumstances. So I wanted to build a smart, resourceful team that could answer all our clients' questions, or at least point them in the right direction. And that's what we've done. It's taken me 11 years, but we have an amazing 80 plus team of IRA experts, 401k experts, actuaries, that we are really the only company in the country that could custody traditional assets, alternative assets for IRAs, 401ks, HSAs, Coverdales, cash balance, defined benefit plans. So we got you covered. If there's a question and we don't know the answer, we will get you that answer. I promise. If I have to stay up all night and research it, we'll do it. We will get you that answer. So don't worry. You are not alone. Question from Peter. Adam, I'm a client of yours. However, I also have another IRA. In a recent stock purchase, that IRA company insisted I use their EIN even though I have EIN for the account. Is that correct? I mean, I don't think it matters. Honestly, you can use, if you don't have an Ira Llc, you can use your own. You can go on the Iris website and get an EIN for the IRA, or you can use technically the EIN of the self-directed IRA custodian. I wouldn't worry about it, Peter. No big deal. The biggest thing the IRS looks at, honestly, is they look at substance over form, right? They're going to want to make sure that you don't do a prohibited transaction. So whether you use your custodian's EIN or you get an EIN for your IRA on the IRS website or use an LLC, the form isn't as important as the substance. What did you do with that money? Did you just buy stock or did you do a prohibited transaction? So I would worry more about the substance than the form. Steve, what's up? Hello, Adam. My self-directed IRA owns a short-term vacation rental. Can I manage this myself or is it required that I use a third-party manager? So again, Steve, I hope all's well. Steve's a great guy, super smart. It's a great question. It's obviously safer to use a third party, clearly, right? I mean, the less you do, the better. 4975C is pretty clear. You're not allowed to provide services to your IRA asset. It doesn't say about being paid. It just says provide services. However, the Treasury regulations allow you to do necessary services, right? So you can pick the asset, you can pick an accountant, you can pick a lawyer, you can pick your IRA custodian, you can decide how much you're going to sell the asset or who you're going to rent it to or what color the house will be. But I wouldn't do active management. I wouldn't go online and look for tenants or paint the home or answer a call in the middle of the night to fix the toilet. I wouldn't do it, Steve. And I know you're a super successful guy. You probably don't have time. So I would just hire a third party. You don't need a management company. It could be just a random guy or lady. Just don't make sure it's not a disqualified person. So not a parent, child, spouse, daughter-in-law, son-in-law. But anyone else can do. This is from Zoom Bivac. I like that. Would it be possible to use a service like Celsius, similar to Gemini Earn? Yes. Okay. So we have obviously a partnership with Gemini Earn and Gemini. So you can open the account in the name of your IRA, okay, and get benefits through Gemini Earn. So I've reached out to Celsius. We're working on a relationship with them. The issue with Celsius is if you have an LLC or a 401k, they're generally going to be able to open the account in that name of the LLC or 401k, and then you can get interest on your cryptos with Celsius. A lot of people like Celsius because the interest they receive, just like BlockFi, is a little bit higher than Gemini Earn. The issue is in an IRA, it's unclear, and I've talked to Celsius about this, whether they'll accept accounts open in the name of an IRA because their onboarding process does not offer IRAs. I hope to find a way to do that. So if anyone's listening that has an in at Celsius, let me know or have them reach out to me or send me their contact details. I'd love to find a way to help clients potentially use Celsius because it is a really good service. But the key is why I like Gemini. Obviously, it's one of the best exchanges in the world. It's regulated. The technology is awesome. The people are awesome. The Earn program's amazing. But they let you open the account in the name of the IRA. Why is that important? Because guess what? The IRS is auditing individuals that own crypto accounts, right? If you have a crypto account opened in your name or potentially in the name of an LLC, you could potentially get audited. They've issued John Doe summonses to these exchanges and they continue to do so. Why? Because they're worried there's unreported cash there for them, and with the huge infrastructure bill that just passed, they need money to pay for this stuff. So they feel like there's lots of money in the crypto world that's untapped and they want to go after it, just like they want to expand the definition of broker, not that because they really care, other than they want to make sure they're capturing all that income. So with Celsius, being able to open the account in the name of the IRA is important. I don't want it opened in the name of you individually. That would be an issue because the account needs to be open in the name of the IRA. If you're doing it in a 401k and they'll open the name in the 401k, great. If it's open in the name of the LLC, because you have a Checkbook LLC, also great. But just make sure you can do it in the name of an IRA. What about investing in Forex? Can the money rolled over from a 401k to a C Corp be used to trade in Forex without triggering? So you could open a Forex account in the name of an Ira Llc. We're also working with a number of Forex exchanges on an integration API where you'll be able to trade foreign currencies directly in the name of an IRA without needing an LLC. But I don't think you need a corp. I don't think I'd use a corp because corporations pay corporate tax, 21% corporate tax. So I would use an LLC, wholly owned by the 401k, to trade foreign currency because the LLC will not pay tax on the foreign currency gains. Since it's passive, you're not going to have UBIT. So I would certainly choose the LLC over the corp to eliminate the 21% corporate tax. Next question. 52 with a strong cash flow, rental property held in my IRA. If I'm willing to take a 10% penalty and live on the cash for now, what portion would be subject to 10% penalty? Well, everything you take out is subject to 10% penalty, Neil. So if you got a 100 grand in your IRA and you're under 59.5 and you take 10K out as a early distribution, 10K is subject to the 10% early distribution penalty and tax. Okay. If it's a Roth, there's ordering rules, contributions, you can always take tax-free. And then the earnings on the contributions will be subject to tax and a 10% penalty. So you could pull out anything you want in IRA. Unlike a 401k, there is no planned triggering event. So you can just pull out, but you are going to be subject to a 10% early distribution penalty. Any chance of IRA Financial customers being able to use Gemini Earn feature in the Roth IRA? Yeah, you can do it right now, Michael. Go on our app. Under additional docs, there's a Gemini Earn. Click on it. Just complete it. There's like 3 questions, basically acknowledge that you want to do this. We'll set up for you. Take you, a couple minutes. We got you. Yeah, Gemini Earn is a great feature. What is it? Again, it's like Celsius or BlockFi. You can earn interest on your cryptos. Why is it really cool in an IRA? Because the interest goes tax-free back to your IRA, which is super awesome. So I would certainly suggest checking it out. Just let us know and we'll unlock that feature for you. For crypto IRA, can I use existing hardware wallet or does it have to be brand new? Great question. Again, no guidance on wallets. The only physical possession requirement in the tax code for retirement accounts has to do with precious metals and Irish-approved coins, bullion. So there's no physical possession requirement for cryptos. I personally would rather you just buy a new wallet. Have a friend buy it. Don't use personal money for the wallet. Have a friend buy it and pay them back with your IRA. And just really from a segregation standpoint, it's just much cleaner to have a separate hard wallet. So I know it's a pain. It's $100 or whatever it is. But I would just keep it separate. That's what I would do. Got a lot more. Okay. Adam, what are my options for transitioning out my 2-family that I have in my IRA? So if you want to pull money out of your IRA, as I mentioned, if you have an LLC, the money has to go from the LLC back to the IRA trust company, Ira Financial Trust, and then you just have to submit a distribution request form on our app, and we'll send you the money. If it's regular IRA, just go on our app, submit a distribution request form, and we'll send you the money. You just need to understand whether it's going to be a taxable event or not. So just beware of that. Adam, we will sell our real estate investment that is in Costa Rica. We expect losses and we want to roll over the IRA. We have a soul okay with you. What do we need to do? So I assume you own the real estate in Costa Rica in your retirement account. If you do, once you sell it, the money goes either to your 401k or to your IRA LLC, and then from the LLC goes back to the trust company, Ira Financial Trust, and then from there it can go to another IRA or it can go to your 401k tax-free. So not super difficult. Just follow that process. Dennis, what is your take on getting a credit card in the LLC? So you can't get a credit card. Why? Because 4975C says you cannot personally guarantee obligation of your retirement account. And we know with a credit card means you personally guarantee the obligation. You can get a debit card, you can get a prepaid card, but it cannot be a credit card. Okay, so just be careful about that. We are working on a white label debit card prepaid system for our clients, but it cannot be a credit card. I wish it could, but because the credit card companies make you personally guarantee the obligation of that card, meaning if you get a credit card for your Ira Llc, you, as the IRA owner, have to personally guarantee that card, which triggers the prohibited transaction. Mike, can you explain how your solo K set up and what info to use when signing up on the site? We should put together a list on all these investment sites that support the solo accounts. Yeah, I mean, it's super easy, Mike. You just need to go on our app, select Solo 401k, answer a bunch of questions. The app will allow you to customize the plan for you. We will guide you through it. Again, Mike, we got chat features, email, phone. If you have questions while you're completing the process, we're here to help. Don't hesitate. But it's super quick. You can review the plan on the app. You can sign the adoption agreement, the plan summary, all on the app. You'll get copies of the documents on our app that you have. And then we can even open the bank account for you at Capital One if you wish. You can roll those funds tax-free into the 401k account. We will assist with the rollover. And then you're in business, Mike. The money's in your 401k. If you have less than $250,000 in your plan, there's no annual filing requirements with the IRS. If you're over $250K, we'll assist you with the 5500 EZ. We help 1099s. We're here to help. We will make your life easy. It is great being self-employed. Not only do you get to control your life, but you get to control your future by having the ability to set up the most robust retirement plan, right? Way better than even if you worked at Tesla or Google. Why? Because you don't just get the employee deferrals of $19,500 or $26,000 if you're over 50. You also get that profit sharing component that lets you go as high as $58,000 or $64,500 if you're over 50. So it's a really awesome retirement plan. You can do, of course, stocks. You can also do alternative assets. And you can do it on our app. We're the only company that allows you to do all this on an app. You can onboard, you can move money, you can invest all through our app. And guess what? We're bringing in investment features where you're going to be able to do, we already let you do cryptos through Gemini, but you'll be able to do various crowdfunding and other investment fund options through a partnership we're going to announce shortly. So super, super exciting. Lots of cool stuff on the horizon. So I think you'll be excited. Can I combine two Roth IRAs, my wife and mine, and invest in buying a flip house? Yeah, you could. You can set up two Roth IRAs, one for your wife, one for you. Combine those assets to simultaneously use those funds for the investments, and you're done. Banks will give you a Roth IRA loan. It just needs to be a non-recourse loan. We partner with a number of non-recourse lenders that will provide you the financing. Generally, they want 25 to 30% down, but they will provide you the financing. So you're good. You can do it, and if you need financing, it's available. Let me just jump into one or two questions more because I promise people to email me, and if I don't answer their questions, they're going to get upset. This is from Brad. Brad, some brokerage firms like TD Ameritrade have a separate checkbox for new LLC accounts that have an IRA as a member. Why do you think they want to know that? Are they going to restrict that account from trading on margin? No, honestly, Brad, why they want to know that is they're going to repress reporting. Generally, there's no need to report 1099s or any reporting to the IRS if the IRA owns the LLC and the IRA is the owner ultimately of the brokerage account, because we know an IRA is tax exempt. So no, it's not about really limiting margin. It's more about repressing reporting and making your life easier. Neil, man, I love your questions. Okay, I'm going to try to get another one for you. I have a large, I got that one ready, rental stream. Okay. Mike again, I have a solo K with you. Thanks. I want to invest some of the capital in some alternative websites. Okay, cool. you can open. So these sites ask for a type of entity, state of formation. So unfortunately, there's no state of formations for a 401k. 401ks are retirement plans. They're not created by state law. So you can write trust if they give you the trust option. Just indicate trust and let us know. We can give you a certificate of trust. That generally works. But generally, if you have questions, let us know. You can email compliance@Ira Financial or info@Ira Financial, and we will assist you, or call us. Mike, we got you. We'll help you out. You can even send us a screenshot of what they're making you complete, and we will assist you. I promise. Okay, so it all depends on the sites. A lot of these crowdfunding sites are kind of difficult to get a hold of and integrate with. They're relatively small, so we're trying to integrate with more to make it easier. But if you have an LLC, obviously you can just use your LLC state of formation. 401ks are not created by state law. It's a retirement account. So I would use the trust. If they let you use the trust option, do trust, and we can give you a certificate of trust. Thanks, Adam. Your service allowed me to choose my own investment, and I love it. I enjoy working with your folks, particularly good folks in Sioux Falls. Yeah, they are awesome. We got a great team, as I mentioned. We got a great office in Sioux Falls. We're actually the largest trust company in South Dakota. From an employment standpoint, we've built a great office, got great team. So use us, call us, email us, chat us. We want to help. We want to be your one-stop place for all your self-directed investments. And again, I'll just be honest with you. Anytime I hear from people saying, Adam, I went with a different company. I didn't know. I kind of didn't see you guys, and I just went with another company. And now I got this question. Will you help me? And I'm always like, of course I'm going to help you. But it always personally, honestly, it always hurts me that someone doesn't choose Ira Financial. Not that I need to get every single client. Because it's a great industry, and we have a lot of great companies in the industry. But I take it personally because I really, really care about doing right by my clients, and I really feel that we go above and beyond, and I really believe that we just have a better product than everyone else. So again, I'm very friendly with a lot of my competitors. They have great businesses, but again, I'm just obviously it's subjective, and I do believe we just have a better product, whether it's technology, whether it's our expertise, customer service, pricing. So anyways, just wanted to kind of relay that you don't have to be a client of Ira Financial to email us, call us. We're here to help, but I am going to ask why you didn't choose us, or my team will, and hopefully we can convince you to come to us at some point. We're doing some really cool stuff. We're going to launch some really cool cashback programs. We're bringing in some really super smart people that are coming up with some really cool ways to get people more excited about retirement accounts. So I promise more to come. This has been really good. I got a couple minutes left. Try to stick to an hour format. Again, if you have questions, you can email us at info@Ira Financial and somehow just say Ask Adam. It will get to me, and I'll try to answer it also in a ad mail podcast format, which is a lot of fun. So check that out. Subscribe to our channel, please. You're getting free content. We do 5 videos and 3 podcasts a week. And if you're interested in self-directed retirement topics, you're gonna love the channel. It's awesome. Videos are good. I spend a lot of time and effort on them, and I even sometimes put on my lawyer's hat and kind of do some cool stuff just on regular legal topics like LLC versus Corp, S Corp versus C Corp. Some basic stuff that lots of entrepreneurs and business owners may have questions about. So check us out. And again, just want to thank all of you for taking the time out of your busy day. I know it's summer. You probably have a lot better things to do than talk IRA or 401k. But I really, really, really appreciate you guys and gals spending some time with me. It's really touching, and I just want to thank you. So let me jump into 1 or 2 more questions. I'm a 50% owner of an LLC. Can I loan self-directed checkbook IRA money to other member son? No. So under 4975, an entity becomes disqualified when it's owned 50% or more by a disqualified person. Disqualified person is deemed as you as the IRA owner, your lineal descendants, parents, children, spouse, daughter-in-law, son-in-law. So no, do not transact with your son if he owns 50% or more of an LLC. Now, even if he owns 30%, it still could potentially be triggering a prohibited transaction if the IRA is only investing or is not exclusively investing to benefit the IRA. If there is some personal benefit to your son or daughter, like, hey, without this money, my kid's company goes under, that is potentially a prohibited transaction because the IRS can deem that self-dealing or conflict of interest. So just be super careful about that. Again, we're here to help. We can kind of run through the analysis with you. There's some case law that we can go through that can just give you some insight and shed some light on potential IRS attack and help you navigate these rules. Do you charge extra fees for setting up Gemini? No, we don't. That's part of our $300 fee. So if you're a client, an ongoing client of Ira Financial, you have a real estate deal with us or crowdfunding, you want to do Gemini? No problem. No additional fee. And guess what? There's no commissions. We don't charge commissions. Gemini charges their regular commission fee to buy or sell an asset. We're the only company that does not charge an asset valuation commission fee on cryptos. Why? Why should we? You're doing all the work. Why should we charge an asset value fee when you're doing well trading cryptos? Doesn't seem right to me. Okay? Other companies do it. That's great for them, but that's not something I believe in. We believe in flat, transparent prices. No termination fees, no minimum balance fees, no commissions, no asset valuation fees. Okay, next year we're going to institute some additional really cool features that you guys are going to get blown away by. So super excited to announce that in the coming months. Okay, a couple more. Oh man, real estate IRA, RO 180K, bought house. How do I increase value of the asset? How do I take a 401k distribution? I'm not a real estate guy, Alice. I don't know how to increase the value. So I'm not sure how I can help there. You can take money out anytime you want, although you need to be over 59.5. There's a loan feature. So if you need some cash and you have a 401k, you can do a loan feature. If it's in an IRA, you can pull money out anytime, cash. If you want to pull the asset out, you have to take an in-kind distribution, subject to tax and 10% penalty. And again, you can't just take one room out as a distribution. If it's a house, you got to take the entire house as a distribution. If it's land, then we can potentially rezone things, and you can take a percentage of that land as an in-kind distribution and not pay tax on the entire value. But with a house, it's just not going to be possible. Okay, last question. I would like to mine cryptos in my Roth. Do you think it's feasible? So yeah, I mean, could you mine cryptos? Yeah, but it goes back to the question, is this, and this will be the last question because it goes back to the first question. Mining cryptos. Will it be deemed a trade or business and subject to UBIT? Now again, if you're doing it yourself, is that prohibited, right? Are you doing the service to mine? Now a lot of people will say, well, I'm not doing anything. It's on my computer. It's a software program. I just turn the computer on and it goes. And you're probably right. I don't think it would be deemed a prohibited transaction. It's like having a trading program on your computer that trades for you, some type of robo/bot program, which a lot of people have. So I'm not worried about prohibited transactions. Is it subject to UBIT? If you're just doing it like one-off, you probably have a good case to argue it's not a business. But if you're investing in a company that does crypto mining, that's what they do, I think the income from that investment, if it's a pass-through entity, will be subject to UBIT. Okay, so that basically, I think, would determine whether it's subject to UBTI, because the active investment that business operates would be deemed a business. Whereas if you do it passively, like, hey, I'm investing with my buddy, he has like one computer that maybe mines like one Bitcoin every few months or every 6 months or every year, I wouldn't worry about the application of UBTI because it's so passive. But if you are investing again in an active trader business, crypto mining company, I think you have to be prepared to deal with UBTI, which can go up to 37%, and you have to follow Form 990T if you have net $1,000 of income from that operation. So there you go. That is today's episode of Ask Adam. I really want to thank you all for joining. Again, this is going to stream live, so you can check it out again if you want to catch any question and kind of listen or watch again, it's going to be on YouTube forever. So just watch it again and enjoy it and give us a like. Why not? I plan on doing these every 3 or 4 weeks. So again, if you have questions, email us, chat us, call us. We are here to help. If you are not a client of Ira Financial but want to be, then obviously we'd love to help you. We got 80 plus team members that are IRA experts, and I believe, are the best source for any IRA or 401k questions in the self-directed IRA world. So we want to help. We are here to help. We are growing, but we're never too big for any of you. We will make time to answer any of your questions. I will personally make time to answer your questions. If you have comments or you have thoughts or anything, you can always email me as well. You can email info@Ira Financial and just ask Adam, and you can send me your comments, your thoughts. If you have ideas for future podcasts or videos, let me know. I'd love to hear from you. It's the most enjoyable part of my job is getting to talk to all you smart people and educating people about the amazing self-directed retirement world. So thanks again for watching, listening. Enjoy the rest of your summer. I know it's coming to an end. It's been so super fast, but probably will do another Ask Adam in mid-September. So that's it. Enjoy the rest of your summer. Thanks so much for watching and listening. And thank you again. Much appreciated.